Greeting, Madam Farah. My name is Safia Amina, and today I'll be presenting to you Apollo's Food Holding Berhad, a well-known player in the Malaysia's confectionery industry. And now I will be focusing on their company background and their financial strength that has contributed to their long-term success. Established in 1966, Apollo Food Holding Berhad has over 5 decades of experience, reflecting long-term sustainability and financial resilience in the Malaysian confectionery industry. For example, economic fluctuation like the 1997 Asian crisis and the 2020 COVID-19 pandemics, Apollo has managed to stay profitable and their operation, showing its ability to withstand the financial condition. Referring to the slide, diverse product portfolio, Apollo offers a wide range of cakes and chocolate products which spread financial risk and ensures stable revenue stream across different product categories. Okay, now to continue, international reach with exports to countries like Indonesia, Singapore and the Middle East. Apollo has gained foreign income and diversifies its market base basically, and it reduces the dependency on the domestic market. Apollo is listed on Bursa Malaysia, being a public listed company where they enhance transparency. Alright, to continue, international reach. So we export to countries like Indonesia, Singapore and Middle East. Apollo has gained foreign income and diversifies its market base basically, and reduces the dependency on the domestic market. Lastly, referring on the slides, strong competitive edge, Apollo maintains cost-effective operation and strong branding, which allows it to stay ahead of competitors and maintain their profitability in a competitive industry. That is all for me. Now I'll be passing to my other group mates. Thank you.
Hi, my name is Nusha Akira. You can call me Akira. And today I'll be presenting about the SWOT analysis about the Apollo Food Holding Berhad. Okay, what actually SWOT? SWOT, we have strength, we have weakness, we have opportunity, and we also have threats. Okay, for the first one, we will go with the strength. Okay, first of all, okay, the strength of the Apollo company is a strong brand reputation, because Apollo Food Holdings Berhad has been established brand in the entire food industry. Okay, next, Apollo Food Holding Berhad also has a wide range of the food product such as biscuit and also snacks. Other than that, Apollo Food Holding Berhad has a strong distribution network with a big distribution, which allow its product to reach a large consumer base. Besides that, the weakness of the Apollo Food Holding Berhad is dependent on a few markets for income and also makes economic change in those market problems. So secondly, the Apollo company also has a limited international presence. This is because the company has a restrict its growth and also opportunity in the global market. Okay, lastly, the Apollo company has a small relative scale because they operate on a smaller scale than some of the competitors. Moving on, the opportunity of Apollo company is growing demand for healthy snacks. Also, Apollo Food Holdings Berhad can capitalize on this trend by introducing more nutrition products. By following that, the other opportunity of the company is expansion into a new markets, because the company can explore more opportunity to expand presence in the new markets. Next, for the Apollo company, is a product innovative, because Apollo Food Holdings Berhad can invest in innovative and introducing a new product that can adapt to the changing consumer preference. Okay, the last but not least is the traits of Apollo Food Holdings Berhad. For the first one is intense competition, because in the industry food there has a lot of higher competitor. Okay, the next point is rapid change in consumer preference that can pose a challenge for Food Holdings Berhad because of their flexibility. The last one is easily exposed to the risk of changing raw material prices, which can impact the profitability. That's all from me. Thank you.
Hello, my name is Ghazi Muzaffar, and today I'll be talking about the ratio analysis for our chosen company, which is Apollo Food Holdings Berhad. So, first things first would be the current ratio of the company, which is used to calculate whether or not the company can pay its creditors whenever payments are due. And based on the graph, Apollo Food Holdings Berhad has a better current ratio in 2023 than 2024 at 20.33 times and 12.01 times respectively. Next up would be the quick ratio of the company, which is basically the same as current ratio, but without you selling the inventory. And based on the graph, Apollo Food Holdings Berhad still has had a better year in 2023 compared to 2024, with 16.91 times and 10.3 times respectively. So next up would be the inventory turnover. So the inventory turnover or ratio of a company indicates how many times a company can sell and replace their stock in a year. And based on the graph, Apollo Food Holdings Berhad did worse in 2023 compared to 2024, with a value of 7.16 in 2023 and 7.51 in 2024. So next will be the total asset turnover of the company, which calculates the ratio at which a company can generate sales with its given assets. And Apollo Food Holdings Berhad had a ratio of 1 in 2023 and 1.04 in 2024. And next would be the non-current asset turnover, which is calculates the ratio of the firm's efficiency in utilizing its property, plant and equipment in generating sales. In 2023, the company had a ratio of 3.18 compared to a ratio of 3.38 in 2024. And the average collection period for the company, which basically means the number of days a company takes to collect its account receivables, the average collection period, it was the same in 2023 and 2024, which was at 39 days. So next up would be the debt ratio, which indicates how much in percentage of a company's total asset is financed using debt financing, with a higher percentage being worse. In 2023, the debt ratio percentage of the company is 6.82%, while in 2024, it's 8.81%. And the time interest earned, which measures the company's ability to cover its interest charges that it needs to pay using its current operating profits, with 2023 showing 4.84 times interest earned, while in 2024 it was 4.93. So next up would be the net profit margin of the company, which shows how much each dollar of sales contributes to profits and how much is used to pay expenses. This means in 2023, 12.31% of sales by the company contributed to its profits, compared to 2024, with a better as overall with 21.2% of sales contributing to its profits. And with next up being return on assets, which means it shows how much of the company's investments into its assets actually turn profit, showing management department abilities. In 2023, it was 12.36%, while 2024 was 21.97%, indicating they had a much better year in 2024. So, lastly would be the return on equity for the company, which is the percentage of return common shareholders get based on the initial investment into the company. In the year 2023, shareholders had a 13.27% return on their initial investment, while in 2024, they got a happier return of 24.1% on their investments. And that's all from me. Thank you very much.
Hi everyone, my name is Mohammed Farsaikal and today I'm going to talk about the financial performance and future recommendation for Apollo Food Holdings Berhad, a well-known Malaysian company that produces confectionery and snacks products. So, based on their 2023 and 2024 annual reports, Apollo is a profitable and stable company. They saw a significant increase in net profit, mostly due to strategic assets disposal. This kind of financial boost is impressive, but it doesn't necessarily mean the core business is growing. When we look closer at the numbers, we can see that the company faces a few key challenges, like flat revenue growth and limited product variety. In simple words, while the company is doing well financially now, there are areas that need improvement to make sure Apollo continues to grow in their long terms. So, let's start with the first point, which is diversifying their products offerings. When we look at Apollo financial reports, we can see that the company relies heavily on its current products, especially those sold in Malaysia. For example, in 2023, more than 175 million out of RM 257 million in total revenue came from Malaysia alone. That's over 68% of their incomes from just one market. This kind of reliance is risky. Why? Because its consumer preference change, or if the market becomes saturated, the company may struggle to keep growing. So, to reduce this risk, Apollo should consider creating new products, especially in line with what today's consumer wants. For instance, there is a growing trend of people looking for healthier snacks, especially among young adults and teens. Products with less sugar, natural ingredients, or functional health benefits are in demand. Apollo could also explore creating new flavors or limited edition items to attract customers who love trying new things. This can include both local and international flavors to appeal to a wide audience. By doing this, Apollo wouldn't have to rely so much on their existing products. They could reach a wider group of customers, increase their sales, and stay relevant in a fast-changing market. So, the second recommendation is to expand their market reach. Just like their products variety, Apollo's market coverage is also quite narrow, because in 2023, only RM75.71 millions in sales came from other Asian countries, and just 5.58 million came from other international regions. This clearly shows that the majority of their business is still within Malaysia. That means there's a big opportunity here. Apollo could grow a lot more by selling its products in other countries, especially in Southeast Asia and other emerging markets like the Middle East or South Asia. To do this, Apollo needs to strengthen their marketing and distribution strategy. This includes improving how they deliver products to other countries and increasing brand awareness through target advertising. In 2024 annual reports, the managing director Chia Jiami mentioned plans to do exactly this, focusing on stronger distribution and better marketing to reach new markets. This is a good sign, and if the company follow through with this strategy, they could reduce their dependence on the Malaysian market and become a more global brand. Now on to the third and final recommendation, which is strengthening their digital and e-commerce strategy. So in today's world, more and more people prefer to shop online, whether it's snack, clothes, or electronics. People are turning to e-commerce platform and social media to find and buy what they need. Apollo has already started using automation and digital tools to improve their operation in 2024, which is great. But when it comes to selling products online, they still have a long way to go. Apollo should focus on building a stronger online presence. This includes setting up or improving their official online store, joining popular e-commerce platforms like Shopee or Lazada, and using digital marketing to promote their products. Platforms like Instagram, TikTok, and Facebook can help them connect with younger customers and keep up with modern shopping habits. By doing this, Apollo can reach tech-savvy consumers, increase online sales, and build a strong digital brand identity. This is not just about keeping up with trends. It's about staying competitive and growing their businesses in a world that's becoming more digital every day. Apollo Food Holdings Berhad is already a strong and profitable company, but to keep that success going, they need to make some changes by diversifying their products, expanding new markets, and boosting their digital strategy. Apollo can secure long-term growth and become a stronger player in both the local and international snack food industry. Thank you so much. That's all from me.